Bryce Carter, CIO and financial advisor with Financial Strategies Group in Okemos. Bryce, the markets, how are they looking here? We are halfway through the year.
Yeah, so it actually ended up being a pretty good first 6 months of the year, and July started off pretty nice as well. Most major indexes are up double digits. In the stock market side, bonds aren't doing quite as well, which is to be expected. As interest rates rise, bonds tend to go down in value. So, because the new bonds you buy are at a higher interest rate, so old, lower interest rate bonds, they tend to go down in value. But things are looking pretty good.
What should we be doing right now with our finances?
I don't know that you need to make any major changes based on like current market conditions. It's more about how it works in your financial plan and whether you're getting close to retirement. Maybe you should be scaling back risk. Maybe you were too nervous to get in the market because of COVID. You know, that's probably not a great long-term strategy. We are looking for a pretty good finish to the year, just as long as the Fed doesn't raise interest rates too many more times.
Sounds like there might be a little one at the end of July.
Yeah, it could be July. I'm looking at basically as long as there's only 2 or less interest rate increases, we'll probably finish the year pretty strong. If they do 3 or more, might have some weakness.
Well, what do you foresee happening with the markets as we move forward from here?
Yeah, I mean, it's really, everything's about the inflation story, and if inflation is finally under control. So we had a couple of good months of data on that. It seems like inflation, it may not be necessarily coming down, but it's certainly slowing. And as that continues, we should see a continued growth in the stock market. And unemployment has been a great number lately, so that continues to go down. These are all good things and point to a positive future.
Yeah. I think sometimes we get the idea that if I've got a financial advisor, I'm just going to talk to them once a year and then I'm done. Is that okay? Can we just leave it you to do it?
I mean,
or do I have to do more?
That's not the way I do things, but your financial advisor should be proactive. You certainly should be meeting with them at least once a year, but you should be hearing from them much more often. I mean, monthly communications via informative articles, quarterly market updates, maybe more frequent phone calls and virtual meetings as well. So tailor it to what your needs are, but really once a year is not satisfactory for a communication standpoint.
Okay.
Yeah.
And I think sometimes people get the idea that, well, I don't have enough money to start investing. You can invest $50 a month.
Yeah.
The younger you are, the better
technology has come a long way for younger investors. It's really easy to get set up and get going, even for older investors at any dollar amount, really. Information has never been more easily accessible. Good information might be a little bit harder to narrow down.
But I found it on the internet.
Yeah, exactly. Everything there is true, right?
Yes, absolutely.
Yeah.
And you have so many different degrees in how you study the money and how it works. And you can find out more from Bryce right there at their website or give them a call at their office. Thank you.
Thank you.